Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at how the market did and how we can plan for a better trade tomorrow. So, if you don't subscribe, please subscribe and share with your friends and colleagues and whoever you think may benefit from it. Thank you so much. And what did we have today is a sideways market resisting at the moving average, but very volatile. Let's see what exactly happened. So, as usual, we will be doing this analysis, pre-market analysis for tomorrow, November 10, Wednesday, 2021. And we use all of this, what you see on the left side, right, on the charts. We'll look at the charts and learn all of this. And we would have additional open interest data analysis, volatility analysis, institutional participation, and the sector performance in the commodities. And also we have some stock picks and actionables on that, right? Let's get into the action. So price patterns, price action, that's the first thing. We have the charts here. Look at Nifty on the left side, and what do you see here? It's kind of a spinning top, right? And it closed below the previous hammer. Here also we have something like a spinning top which closed as an inside bar below the previous close, right? So that's what, 24 points down, red candle formed in the Nifty, right, and closing below the previous day after an attempt in the morning to just take away the resistance of the moving average, right? But it failed and then closed below it. And it formed some kind of a spinning top where we have a very small body and almost equal size of wick on both sides. BANKNIFTY also had a 70 points dip, not big, small body, not big bearishness, but it was a very small body, a red spinning top kind of candle with equal size wicks and a small body, right? And it's also resisting at the moving average, 20 moving average, symbol 20 moving average. Now intraday, if you look at the price action was consolidation, you can see that. You can see all of this, right? So this is what intraday happened. This is a support zone, right? This is a support zone. It was basically consolidating, but it was the range is less, but look at the volatility, it is up, down, up, down, up, down, but now we're moving anywhere, right? It's all, ended up losing a few points. So that's exactly what happened. And Bollinger Bands, this is how it looks like. You can see that the upper band is slowly straightening, the lower band also straightening, upper band is slowly squeezing. So contraction of the volatility bands are happening, and it indicates that the upper band is going sideways. So you can expect a sideways move for some weeks. Same with BANKNIFTY. The difference between the median to the upper band, median to the lower band is still high. That is why we can expect big volatility. Even though ultimately the market won't, will be moving up and down, but that moves will be highly volatile is what the bands clearly indicate. Look at the support and resistances here. What you see here is right, it's at a support, and support is at the 80,000 level, right? Slightly it has gone up. So first, the next major resistance will be happening at the 23 Fibonacci projection, which is 18,350, 450, that range, and after that you have 18,650, which is the previous all-time high near levels. Now support 17,850 downside is a previous swing low. Below that you have 17,600, 650 levels, which is also previous swing low. So all immediate two supports below, and after that you have 17,350, 450, that range. So then you have 250 range, and then below you have the 17,000 level. So that's about resistance on the Nifty. Right side BANKNIFTY, if you see, you can see that it is currently at the support zone. This is what happened. It was hovering around this support zone. That's around 39,500, and above that the resistance is 40,000, which is attempted 4 times, and every time, one time it shot up and made the all-time high. Next 2 times it failed, and now above that the resistance is 41,000 and then 42,000, which is all-time high. So below, if this current support of 39,500 is gone, then you will reach a major Fibonacci 23 retracement, which is 39,000. And then if that is gone, you have 38,400 levels, and which is the previous swing low. Now if that is gone, then you have the 38,000 and then below 37,800, that kind of level. That's the important resistance for the Nifty and the BANKNIFTY. all the bands, volatility contractions and consolidation we have seen. Momentum divergence, this is the Nifty weekly, right? It's a bullish reverse divergence which is in play, and it is confirmed and it is in action. That's why market had bounced up. Whether it will meet the target of taking it back to all-time high, we don't know. But divergence is something positive that is already there. Momentum reverse divergence. This is the daily charts of Nifty and below daily chart of Nifty. Both shows that the momentum is still sideways after it has lost it, slipped in the sideways one. It is still not bullish on the short term, but in the medium term and the long term, it is bullish for sure, definitely. On the RSI levels we are talking about, right? That's about momentum. Trend indication. Trend is measured with the help of ADX indicator. So it is clearly a DMI negative is dominating on both the charts. You can see the red is dominating. It is cost hour. It is in the bearish zone short term. The trend is not great in the short term, but and also the strength of the trend also is clearly going downside. It's on pricing up. Both Bank Nifty also. Only difference is that Bank Nifty weekly has got the weekly Bank Nifty and Nifty both are in bullish zones, but weekly the difference is that weekly the strength, the green one, the strength ADX strength of the trend indicator also is seen upwards. This is not the case in Nifty. So medium term Bank Nifty remains bullish. Short term both are bearish in the trend as per the trend. Momentum we already seen it is bearish as short term. Other terms, other medium and long, it is bullish, and also there is some bullish momentum divergences that you can see. So that's about the momentum average divergences and the trend indicators. Now we have the volatility VIX. VIX had slipped down and it had then moved up, and again it has slipped today slightly 2% down. So it maintained 60. However, it has not gone below 15. So this is hovering around the range between 19 and 16. IV is 15.14, IVP is 32. It went up till 40-42 levels and it has then fallen back to 30-32 levels, right? So that's volatility in the blind VIX, India VIX, right? So open interest data is the next one. This is the chart that you see on the Nifty. You can, at a glance you can understand this is the bearish graph, bearish chart that you see there, right? It's all green, that's all call trading. Here this is also ultra bearish, more bearish probably, because you see all the highest writing for the next expiry of November 11, which is day after tomorrow. Huge resistance that is written everywhere. So it's a bearish charts. And where do you find the Nifty support? 1700 is where the maximum put rating is there. After that 17500. So the fight, it may not, resistance is seen as 18,200. That means 18,000 level can close at that level also can happen, but 18,100 also has got good gold rating, right? So it could be probably between 7,900 and 18,000. No, or if it is 7,900, if it cannot keep, then it goes and close at 7,500 probably. That may be something that may work. So mostly 18,000 may be the close. You can guess it like that. Similarly, 39,000 is the maximum called put rating, and then 37,000, that's a big 2,000 points gap, right? Similar to the Nifty. Now look at the resistance that you have seen. This is a support where the put rating is there, 39,000, and 40,000 is about having good resistance put call rating, and then 42 also has call rating. So 40,000 is a big resistance. 39,000 is at support, right? Good support. So 39,000 and 40 where the action will be, just like 7,900 and 18,000 is where the Nifty. Similar to that, here it will be like this. So that's the open interest analysis. How is the sectors performing? The IT sector closed with a gravestone doji. So be very careful. It is very bearish. It's on daily, so it may not make too big a fall, but it could be because of the US dollar weakening slightly and rupee strengthening. Could be that. I don't know. Gravestone doji normally follows some bearishness, but since that is only not on a weekly, but it's on a daily. So, but yeah, momentum is anyway lost, so you'll have to wait. Metal also 0.5 down, 0.5% down, 50%, 0.5% down. That has lost the momentum, and then we'll have to wait. Auto closed, this auto and reality is only two sectors, which is good. 1% up today. Momentum is fine, so we can pick stocks on the 6 to momentum resistance. So pharma closed higher, but it is inverted. Inverted hammer may show that the chain reversal to the upside can happen, but short-term movement is not there till the bullish zones. So wait. FMCG also closed at 0.5% down. Lost movement is not regained, so stay away. Reality closed higher. It's a small body, so it had regained momentum last week itself, and then just turned bullish basically in the momentum wise, and you can put the stock cautiously as long as the momentum is sustained. So reality auto only sector that can let us space for going long, others are all sideways as of now. Look at the institutional participation. The Fyers again sold. So that is 1, 2, 3, 4 days continuous selling after the previous October 25,000 crore selling. This is the concept. But DAs are taking the opportunity to buy. I'm not sure how exactly same amount was bought on 2 days. Right? 8 November also you have the same amount, and both days you had the same amount. It's interesting. Yeah, so domestic institutional, but affairs selling is a concern. Now look at the US dollar currency. Right side you can see that the US dollar index, it's falling. The US dollar is weakening probably. Currency pair shows that it's rupee strengthening obviously, and today but we had a bounce up. Probably some intervention that happened. I don't know. Away intervention I meant. So 74 was breached and then it regained and closed up. So rupee overall the last several days had strengthened, but today it did attempt a small bounce after the slip off in the support zone. Right. So oil is still in the crazy zones of 81, but it had cooled off a little bit last 2 weeks after it had gone to the 85 levels and then cooled off. But today also it is green and it is attempting to move further up again after. Remember that it is at a multi-year, high levels, and it's not very good for the Indian economy as such. But look at gold. Gold has weakened, rupee has strengthened, and gold is breaking out. Right. So the major resistance is there upside. If that is gone, then you have a very good move that can be expected upside till 1876 kind of level. So gold is breaking out of the handle of the cup and handle weekly pattern. Right, so gold has been bullish. It had slipped multiple times, but again went back to its major support zone, and now it is breaking out of that and meeting a very good previous resistance, which is at 1824 kind of levels. This is the dollar value of the gold, not the Indian gold value. Right? And some flat moves are seen on the US markets, except Dow Jones, which seems to be at reasonably good grain. But let's look at the next day for the actual figures on how the Dow Jones, the Nasdaq, the S&P 500, and the UK markets, how they perform. We'll have to see before the pre-market to get a clue from how our markets may perform accordingly. Now the action was to Aditya Birla Fashion is having a good rounding pattern also, and a channel channel move on a weekly candle, and it will break down the 5-year-old resistance, and again another interim 2020 level resistance also is broken. Weekwise daily also is bullish. So very good volumes, very good momentum, very good trend, and going in the channel, and a rounding pattern breakout, and a multi-year resistance taken out. So very bullish Aditya Birla Fashion. And Bharat Forge is another one, is also having a cup pattern, and it is also a major resistance where a lot of consolidation had happened. So there is every chance that it can. They've already broken out, but if it sustains with another weekly candle, so daily definitely has moved further about this. So this is also in a channel trending up. So it's a very bullish pattern with momentum also good. In between it is slipping. It had slipped at the bottom. So yeah. So good momentum in all time frames, good trend, good volumes, and candlestick patterns, and a breakout from boundary resistance. So Bharat Forge and Aditya Birla Fashion, good picks. Now to wrap up my view for the short term, right, in 1 or 2 days, but for tomorrow it's mildly bearish. Reasons: the chart shows that the momentum has slipped and continued to slip in the last many days, and the trend also, ADX trend also is on the very short term, it is bearish. Resistance is there on 20 moving average, and it was not able to take it yesterday, resisting. Today also resisting. Momentum and price action showing resistance. Foreign institutions are not participating, their participation is not good. They had sold huge in October and November also, they keep on selling. It could be related to tapering, where the money is taken out, you never know. But their participation is a worry. Weekly bullish reverse divergence is still there, so it can play out and then still could take the market to the previous all-time high. So that's possible, that's why it is mild. Right, so otherwise very short of for tomorrow, it looks it's at the resistance. Chart shorts at the resistance. Fyers are selling, so um, momentum is still on the sideways. So all reasons enough to be bearish, mildly at least. Volatility range 15-20 is more or less confirmed since so many weeks now, and today it had cooled off a little bit after a spike yesterday. So as long as it is within this range, but intraday volatility is very high. Right, today also at around 130 or something, both indexes had a big fall and big recovery. So that takes away all the intraday traders' money. So you have to be very careful to play that with vertical spreads or counter spreads to take advantage of value or to have defined risk. Right? So this is something for the options traders, who play on the based on the volatility. Right. So that's a repetition that you have to do. So that's a wrap up. Mild bearishness may be expected as per the chart. So stay. If you are positional, you have to be aware of where to get out and what should be the support levels and what were the stop loss and all this has to be clear. But if you are intraday, you have to be again. You should know how the reversals happen. The candlestick patterns has to be. And if you are non-directional, then it's all about volatility and risk reward and then managing that. So yeah, I hope this gives you a clear picture on what happened today or last few days, what's happening across the different instruments, the volatility, institutional participations, commodities, and all. You might have got a very good idea to form your own view, take the trades tomorrow and your own trade plan. If it helps, hit the like button and share it with friends, colleagues so that everyone benefits. Thanks for your time. Thanks for watching. Happy trading and happy learning.